Good morning and happy Friday. Jordan Keck here, your complicated deal guy with your weekly market update. Kicking off, interest rates moving up a little bit from last week, 6.64% moving to 6.68 this week as a result of not a whole lot of optimism here. We're seeing inflation fears in the Federal Reserve, Iran not in a position where there's going to be much progress there. And so we'll get into those pieces. But before that, wanting to talk about our weekly mortgage tip. This week, talking about the secret hack on VA loans that you can do with seller credit not a lot of people know about. So with every other type of loan, seller credit can be applied towards the buyer's closing costs, prepaid items, and VA non-allowables. But on a VA loan, any additional seller credit you have that doesn't get used up can be applied towards paying off buyers' personal debts. So to give you an example, if we've got $10,000 in closing costs, but the seller agrees to $15,000 in total credit, there's a gap of $5,000. Normally, that would just be left on the table or we'd have to find some other way to use it. But on a VA loan, you can apply that to pay off some of the buyer's personal debts, whether it's a car loan, credit cards, you name it, at closing. And you can even exclude those debts to be able to qualify for more. So really cool feature there. It does have to be paying off the debt, not just paying it down. So often I've had one client where they had a few $100s of extra credit and they didn't have any debt. So I told them, go to Best Buy, get a credit card, add it on a credit card, put a TV there, show us a statement, and the seller's basically going to pay it off for you. Pretty cool little trick. So next up, as far as news this week, the US and Iran have exchanged strikes this past week. Iran said that the Strait of Hormuz is closed for business. The US strikes hit about 140 targets in Iran early in the week, and then later Iran attacked the US bases as well as their neighbors. More strikes happened throughout the week, and virtually no ships have passed through the strait, with only 6 ships reported to have gone through in secret because of the risk of being attacked. The U.S. claims that they're going to reopen the strait and resume control, and peace talks are not going well, renewing those inflation fears. And inflation right now is the number one thing that interest rates do not want to see. Next, we got the 21st Century Road to Housing Act that was passed into law this week. So gone through the House and the Senate. The president didn't sign it, but after 10 days, it didn't veto it. It automatically passes into law. This comes after nearly 2 years of advocacy from the NAR to make this happen, and some of the changes include updating and increasing FHA loan amounts, standardized appraisal reconsideration of value processes for FHA, VA, conventional, and USDA, reforming the appraisal licensing requirements to make it easier for new appraisers to get in, modernizing manufactured housing requirements, and restricting investors with at least 350 single-family residences from buying additional units unless they are doing build-to-rent. We also got CPI, so Consumer Price Index inflation, and PPI, Producer Price Index for wholesale inflation. CPI for June fell 0.4%, below the 0.1% drop that was expected. Big factor on this one is nearly a 10% drop in oil prices, likely temporarily due to the uptick in hostilities in Iran. We might see that reverse here in the next coming months as those new reports come out. Year-over-year inflation fell from 4.2 to 3.5, and the core rate, which strips out food and energy, came in at a 0.02%, basically flat on the month, better than the 0.2% gain expected, and year-over-year the core decreased from 2.9 to 2.6. Wholesale inflation also fell in June 0.3%, below estimates of a no change for the month. There was a revision lower in May, bringing the reading down from 1.1 to 0.6, so a pretty big change there. Year-over-year, the headline inflation fell from 6 to 5.5. May was revised down from 6.5 to 6, with the market expecting a 6.2% year-over-year. The BLS said that 2/3 of the drop was due to lower gasoline prices, which fell 12% in the month for the wholesale side. The core rate rose 0.2%, below estimates of 0.4, and the previous reading was also revised down from 0.4% to 0.1. Overall, both the consumer and the wholesale inflation came in below estimates, good for the markets and rates, and again, at least temporarily. Retail sales for June rose 0.2%, matching estimates perfectly. May's report was revised higher by 0.1%. And the control group, which goes into the GDP rating, which strips out auto, gas, food, and building materials, rose 0.5%. And May was also revised higher by 0.1%, all perfectly in line with estimates. Not a whole lot of changes there. And lastly, pending home sales for the month of June, which is signed contracts, fell 5.4%, pretty much due to higher rates. This broke the decline broke a 4-month streak of gains due to the higher rates from the situation in Iran, because this was people who were going to be shopping for homes in May and June, right as their interest rates were going higher. Year over year, pending home sales are down 0.3%, basically flat on the year. As always, hopefully this is helpful. Have a fantastic weekend. We'll see you next time. Take care.